We're very happy with the outcome of our pre-feasibility study, which was released early on in the month. The pre-feasibility study focused on two things: unlocking grade through geological drilling. We did a 16,000 meter drill program, which was a combination of RC and diamond core drilling, as well as unlocking the metallurgy. We had lots of success in improving our recoveries through the numerous test work that we did. We're pleased to say that all of this went extremely well. The project now unlocks an MPV of 470 million post-tax and royalties. It's got an IRR of about 56%, with an initial capital spend for a 2 million tonne per annum project of $158 million. And this is all over a life of mine of at least 30 years. The PFS obviously is a lot more detailed than the scoping study, and we're pleased to say that economics are very much the same. I think what happened with the PFS is through the drilling we unlocked what we call the Angel Zone, which is a higher grade, higher recovery deposit. And so what we've got is higher grade and higher recovery for the initial 10 to 15 years, which helps out with the initial cash flows. We focused both the PFS and scoping study on a 2 million tonne per annum project, and this was necessary as this helped us do comparisons with the likes of Niobium, which is a similar size operation. The big differences between the PFS and the scoping study are there's been a slight increase in the strip ratio. The reason for this is we've taken out most of the weathered rock up front, which we had in our scoping study. And the reason why we've taken this out, it will be stockpiled, but the recoveries are lower, not as well understood as what we'd like it to be. So we've taken those out and we've included that in strip in the initial years. We've also done most of our initial mining in one pit, which is this Angel Zone pit that I've been referring to. Other than that, CapEx is very much the same. There's swings and roundabouts, slightly more working capital over the life of mine, but less initial capital. So in and around the $190 million capital mark, with all inclusive. The sizing of this plant has become more and more critical the more we've got to understand what we've got. And the reason for that, with the higher grades and higher recoveries that we've seen in the PFS, we'd be supplying up to 10% of the world's niobium supply if we came on at 2 million tonne per annum. This we don't believe is in our interest or the interest of the market. So we've decided to scale down to about to come in initially at supplying about 5% of the world's niobium supplies. We believe the market can comfortably handle that. Over and above that, by reducing throughput, you reduce initial capex, and as we all know, in funding up projects, capex and initial financing is very important, and we believe that we'll get a lot of support with the initial reduced capex at this level. And then thirdly, obviously, a dilutionary factor for shareholders. We're a public company, we're working with shareholder money, we want to give shareholders decent returns, and how you do that is reduce spend and increase returns later on in the life of the mine, which is what we're planning to do. We've got a lot of news flow coming in between now and the release of our DFS, which is expected late third quarter, early fourth quarter this year. We've got drill results that we need to be releasing in the next 2 to 3 weeks. We've also got an updated resource, which will be done on the back of these drilling results that I'm speaking through, that we expect to have done in May, and it's on the back of this resource that we'll be doing our DFS. We're expecting quite a substantial resource upgrade based on the amount of drilling that we've done. We've also got our pilot testing. We've just shipped 70 tons of representative material across to Canada. SGS Lakefield in Canada will be doing our pilot test work, and that will be done through May and June, with results expected in June and July. Over and above all of this, we've employed Claude Defresny, who's a Canadian. He did all the marketing for Niobium for 13 years, so understands the ferro-niobium market and has got good relationships within the market. And he is out looking for offtake as we speak. And over the next few months, we're expecting to have offtake in place, and chats will continue with the off-takers. We've got a project financing person that we've just signed on, Gary Baumgarten, and Gary will be working closely with Claude and with the banks to ensure that late this year, early next year, we'll have a financing solution for our project.